What if trading was a video game and there was a cheat code for this game that would help you predict exactly where markets are going to go with a high degree of accuracy? What if this cheat code would tell you when the market was going to rise, when the market was going to fall, and when the market was going to rise again? Do you think that would improve your trading? If so, then you need to stick around throughout this entire video, because the technique I'm going to show you can help you accurately predict exactly where the market's going to go, when the market's going to move, and where the best zones in the market are to actually place trades to help you become a more accurate trader. And throughout this video, I'm going to break this formula down. I'm going to break down this technique in a very simple way so that anyone can understand it and start to implement it directly after this video. So stick around through the whole video, and if that sounds interesting, make sure you go ahead and click that subscribe button below the video to the right hand side. Click the like button, follow us on the socials. Links for Instagram and Facebook are in the description, and I'll see you right after the intro and disclaimer. Talk to you soon. So throughout this video, I'm going to be teaching you this technique, this formula, this cheat code, if you will, for the Forex market so that you can actually use it in your trading. And by the end of the video, you'll have every rule for this technique to be able to go in the markets and actually start using it to help you make more accurate trades. Now, also in this video, I'm going to be going over the top 5 major pairs and sharing with you my predictions on those pairs based on what you're going to learn in this video. But before we do either of those things, what I first want to do is show you some emails that I sent out to members of the Pro Trader Report on the dollar yen, predicting where this market was going to go based on what you're going to learn in this video. So let's jump into that first right now. So here is the Pro Trader Report from July the 8th on the dollar yen. Here on the dollar yen, you can see that I said the dollar yen is a pair that has been on the radar a lot lately. This week, it seems that this pair is coming back up to a level of structure that has been tested multiple times recently by price. This qualifies as a 3XT OTZ and is a level in the market that I'll be looking at for shorting opportunities. And what I'm talking about in this email is this red zone right here between, as you can see down here, 108.81 and 109.30. Now, I'll put a screenshot of that over here somewhere. And also, I'm going to delete everything off the chart, and we're going to make the zone at 108.81. So let's find 108.81 right there. It's close enough. And 109.3 right there. So this is the resistance zone I was pointing out, and that Pro Trader Report came out on July 8th, which is the candle you see right here. That is July 8th's candle. And I was saying that this area is going to become resistance for this market, or is likely to become resistance for this market. And let's see what happened. This market came into that area and immediately found resistance. As you can see, we push up to that area, that zone, and immediately we find resistance. And what I'm going to do in this video is show you the exact process I use in order to predict market moves like this. Now, I have a few more examples that I'm going to show you. As you can see, we push up to this zone once more, and we find resistance yet again, all predetermined and predicted beforehand by the Pro Trader Report and by the techniques and the formula that I'm going to show you in this video. Next up, let's look at our next email analysis that came out on August the 5th for the dollar yen. I'll zoom in so you can see this a little better. Okay, so here on the dollar yen, I said that here on the dollar yen, we have a market that is in a downtrend under the 50 EMA. This market also has just broken a previous level of support, and that this zone in red, you see right here, is an area I'll be looking for possible short trades. That zone exists between 107.25 and 106.75. So I'll put a screenshot up just like I did before right here, and I'll also make a zone. Here you can see that we went ahead and broke below our level of structure support right there. So at this point, I'll put our zone at 107.25, which is right here, and 106.75, which is right in this area. So this is the area that I said once we got broken through, just like we did, I was going to be looking at for possible resistance. I'll actually draw a red box on this area right now. So this is the area I was looking at for resistance, and that email analysis came out on August the 5th. The August 5th candle is the last one you can see on the chart. So this is the moment that I made the prediction. Let's see what the market does. Market comes back into that zone the very next day, right here with this candle wick. And then we find some serious resistance out of that market. Now, as we push down, after finding this resistance, we're pushing down. I'm going to show you our next email analysis. Our next email analysis was on August the 12th. And I'll zoom in yet again on August the 12th. And again, guys, I'm going to show you exactly how to make these predictions, so stick with me. I'm just trying to give you proof that this stuff works. On August the 12th, I predicted that the market would come out of this green zone with a counter trend push. This green zone existed at 105.08 to 104.69. Let's go over to the chart. 105.08 is right there. Between that and 104.69, which is right there. So in this area is where I said that I was expecting the market to hit and have a rise from, a bounce, a counter trend push to the high side. As the market comes into that area, what happens? The market gets a counter trend push to the high side. Now, then what happens? Remember, we still have our red zone back here that we came into from our previous Pro Trader report with this candle. The market comes up to that zone, finds resistance, pushing down, comes back down to our support zone and finds support yet again. Now, something interesting happens once more. The market now pushes above our zone here. And what I did as soon as that happened, I will show you. As soon as that happened, on September the 16th, I sent an email in the Pro Trader report telling traders that I have a zone of resistance, red zone here, that I'm looking for if the market touches, I'll look at as resistance, and a zone of support that if the market gets into, I'll look at for a possible rise out of the market. You can see that right here in this description. The resistance area was 109.32 through 108.79. The support, the green zone, was 107.25 through 106.75. And this is our last example, but just again going to prove to you how well this actually works. So our support zone, let's look at that first. Our support zone was 107.25 through 106.75. 107.25 is there. 106.75 is somewhere in there. And I said on this candle right here that I was looking for a pullback into this green zone before looking for a long trade. We get a pullback into that zone, and what happens? We get a push up. We get another pullback into that zone and another push up. Now remember our resistance zone on that last Pro Trader report. Where was our resistance zone? It was at 109.32 through 108.79. With that being the case, the market came into that area, found resistance. Came into that area, found resistance once more. And now we're getting up to date with current price action as the market has nearly found resistance again from this area. Now guys, if you want to receive emails like what you just saw throughout this part of the video each and every week in your inbox showing you the areas that I plan to trade around, then I've left a link at the top of the description down below for the Pro Trader report. We have very limited spots left in the Pro Trader report, but it costs about as much as coffee each week. And it's been extremely helpful for some other traders. So if you'd like to jump in that, claim your spot, and start getting emails like that each week, the link is in the top of the description. But other than that, that goes to show you how well that this works. And what I'm going to do now is show you the exact process to creating predictions like this. As you can see on the dollar yen, right now I'm batting 100% at 6 out of 6 using this cheat code. And that's exactly what I want to teach you how to use for yourself right now. So now let's jump into the technique itself, the formula itself, so I can show you guys how you can trade this on your own, and then we'll jump into the top 5 major pairs and I'll share with you what I'm actually looking for on those top 5 pairs based around this formula and this technique. Let's go up to a blank chart though and talk about this technique now. Now, actually I'll show you on the dollar yen. It'll make it a lot easier. On the dollar yen, let me show you on real price action first what I was looking for at the moment of right in here. Whenever I called out a level of resistance was a level in the market right here. Now I'll use a horizontal line actually, that had been tested multiple times in the past as support and resistance. That's all it was. And as the market pushed up to that level, I knew that because this level has acted as support multiple times in the past, as well as resistance, that this was a level that would probably provide some resistance as this market pushed into it. And that's exactly what happened. Now, in terms of support, when the market was down here at this area, all I did was took a horizontal line, placed it on price action, exactly where price action was at the time, scrolled my chart back, and asked myself, considering where price is now, where is a likely zone for price to turn around? I noticed this lowest low right here, and actually noticed that it was a level that had been tested multiple times here and here. And then I put another horizontal line a bit higher and created my zone of support that I expected the market to come into and find support. And that's exactly what happened. As we pushed back up, when we're pushing back up, what I'm looking for is what was the most immediate level of structure support that was broken. Look at this level right here. Would you not consider that the most recent level of support that was broken? Right? That impulsive move down broke this level of support. So that was a level I was looking at for possible trend continuation. As we came up into that level, we got trend continuation, pushing down, back into our support level, pushing up. Now, the next level I'm looking for after this push up is where? The most previous level of support that was broken with the addition of this, level of resistance that was broken with the addition of it being support before in the past. So that gave me a good reasoning to try to find long trades out of this area. In terms of resistance, another area that had been tested more than 3 times as support and resistance is right here. The very next one to where price action is. Once price gets up in this area, the next resistance level is right here. So I knew that was an area I wanted to look at for possible short trades, and then the market falls from that area like so. And in order to show this in a more in-depth and easier to understand example, I'm going to do it on a whiteboard now. So the actual rules to this formula, the rules to this technique are extremely simple. We're looking on the daily chart for levels of structure that have most recently been broken for trend continuation. What does that mean? That means that if we have a market that looks like this level of support is the most recent level of support that has been broken. Since that's the most recent level of support that's been broken, we're going to use it as resistance. Now, when I say broken, I mean broken, closed below by one candle, immediately followed by another red candle in a bearish example. This is something I see a lot, and I'm sure you do as well. You'll see a market do this, push down, push down, push down, but the candle that breaks through this will just be one candle. And in that scenario, it may look something like this. This candle, we have one breakthrough. It turns out to be a false breakout, and the market heads higher. So that's why I wait for a confirmation candle, at least one more candle that breaks below this level of structure support. And as long as I get that, then I see this level of structure support as possible resistance and look there for a possible short trade. And in a bullish example, it would look like this. We would need to see one break and close above candle right here, and then another consecutive break and close above candle to count this as a level of resistance turned into support that I'm looking at for possible long trades. So in the simplest form, looking at the previous level of structure that has been broken as support or resistance. In the downtrend example, it would provide resistance and trend continuation. In an uptrending example, it would provide support and trend continuation to the upside. That is the trend continuation play that I use. The cheat code for trend continuation is looking at that on a higher time frame like the daily chart and then dropping down to a smaller time frame to try to find entry reasons. Now, as for counter trend, let's say we have a market that's doing this, and then you see that we break trend and we start heading lower. The only way I look for possible counter trend trades is by looking at the most previous. If price action is right here, then if I look left, the next level of structure support would be right here. This is the next level of structure support if price is right here. With that being the case, I don't only need it to be the most previous level of structure support if we're pushing down, looking for a buying opportunity counter trend. I need it to be the most recent level of structure support. Also, I need it to be tested as support and resistance, like so. So it needs to be at least support once and resistance once, and it needs to be tested 2 or more times. If that's the case, then that becomes a zone that I can look at for possible counter trend long opportunities. And you saw that time and time again here on the dollar yen. That's exactly what we looked at on the dollar yen. So that's the exact formula for this cheat code. We're looking for levels of structure. Let's do this. We push down. This is the level of structure that has most recently been broken at this point. So because of that, we're waiting for the market to come up to that level that's most recently been broken. We're using it as possible resistance because we're in a downtrend. As we break below this level of structure, this would now be, if I have this as my impulsive move, this is my most previous level of structure support that was broken. That becomes possible resistance. Counter trend plays, what are we looking for? We're looking left to see if there's a level of structure that has been tested multiple times as support and resistance. This was twice as support, but if we scroll the chart back, you can see we have some tests of resistance here too in this area. With that being the case, I used this as a counter trend zone that I thought would push the market up. And it did. As we pushed up, my next level was a counter trend level at this point. I was looking for a level in the market that had been tested multiple times as support and resistance at least twice or more. Does this meet that criteria? Yes, which is why I used it as resistance. As we push back down, I needed an area that had been tested as support and resistance at least more than twice. Does this meet that criteria? Yes, it does. And the market moved higher from there. So that's what it looks like on a chart. And now let's take a look and see what we're actually looking at in terms of moving forward on the top 5 major pairs. That is the rules you can use that will act as a cheat code in terms of where markets are likely to go. You can use these areas and these specific rules for these areas that I just showed you to act as a cheat code for the Forex market and help you make better predictions on where the market's likely to go. Now, in terms of where the dollar yen is expected, I guess you could say, to go now, we're at the top of our zone that we had created. And what I would expect now is eventually this market is going to do one of two things, right? We have this zone of resistance. This market is going to do one of two things. One thing it could do is use this resistance and end up pushing down. If that's the case, then I'll be looking here yet again in this same sort of zone, which actually is going to move a little bit with this new low. I'll be looking in this zone for possible long opportunities if we get a major push down out of the dollar yen. Now, the other thing it can do other than pushing down, this being my long area that I'm looking in, the other thing we could see is this market push up. If we push up and we break above this level and we have one candle that closes above followed by a consecutive candle that closes above, like the rule we talked about earlier, then I will be looking, if we get that break in this same exact zone, for possible support out of this market. Now, if that happens, the next thing we have to look at is where's my next resistance level? Well, if I put a horizontal line on my next resistance level, we can see that this zone here is, in fact, if we get this break above, and this is where price action is, at 110 even. If I look left from 110 even, my next resistance level, in fact, is right here. And with that being the case, I look left again and say, is there levels of support and resistance looking left? Is there more than 2 of them? The answer to all of that is yes. So this will be my next resistance area. So as for the dollar yen, what I'm looking at going towards the end of 2019 is this market either to push down. In the case of that, I will have this as a support zone. I will look here for a zone of possible resistance if we push below this area at 108. And if we push up on this market and break above resistance here, I'll be looking at this zone as support to push the market higher into our next resistance level right here. And you can read all those numbers yourself. I won't read them out loud just for the sake of not making this video super long. But instead, now you know what I'm looking at on the dollar yen. Let's take a look at the euro dollar. So here we are on the euro dollar. And right now, in the same exact way that we've been looking at everything else throughout this video, I'm going to tell you guys my analysis on this pair. On this pair, one of two things can happen anytime you look at a currency pair. This pair is either going to go up or it's going to go down. I am now prepared for both of those situations. If this market goes up, I will be looking in this area in red for possible shorting opportunities. The reason is because this is the most previous level of structure support that was broken. It also has been reacted to as resistance and support multiple times in the past. So with that being the case, this is an area I'll look for shorting opportunities out of the euro dollar. Now, if this market decides to go down instead of up, I'll be looking right here at the most previous level of structure support for support in general to see this market get a counter trend bounce for the same exact reasons we talked about. Looking left, there's multiple times this level's been tested and reacted from by this market. So that's all I'm looking for in terms of trading here on the euro dollar, at least in terms of my higher time frame trades. Now, let's move on to the Aussie dollar. Here on the Aussie dollar, we're pushing down now to a level of structure support. Again, remember how simple trading really is. The market's going to do one of two things based on a position you place. If you place a position to buy, you have a chance of the market going up or down. If you place a position to sell, you have a chance of the market going up or down. One of the two things is going to happen eventually. So if we know that the market can push down or can push up, what do we want to really do is prepare for both of those situations. So how am I going to react if the Aussie dollar pushes down? If we push down on the Aussie dollar, I have an area right here that has been resistance and support, resistance, resistance, support right here, multiple times in the past. So if the market reaches, which we almost have reached this, got into this area, if the market reaches this area, I'll look at it for possible long trades. We've already reached our most previous level of support right here that had been resistance before in the past. The market used that as resistance. So if we push higher, I'll be looking again in this zone for possible resistance. That's as simple as I can make this, and that's really how simple trading can be. Complete your analysis by looking at the market, deciding it's either going to go up or down. And although I don't know exactly what it's going to do at this very moment, right now, I don't know whether or not the Aussie dollar is going to go up or down, but I can prepare for both of those situations, which is exactly what we're doing with this analysis. Pound dollar now. On the pound dollar, I actually already have a trade on going long on this pair, expecting a long out of this pair. The reason being we break above what? A previous level of resistance that has been resistance and support multiple times in the past. Since this area has been resistance and support so many times in the past and the market broke above it, I then started looking for that area to become support. We've now gotten into that area, and that's exactly what I'm expecting is support out of this market. If, again, the market can always do one of two things. There is a chance the market breaks below that support level. I want to prepare for that situation, even if I'm going to be wrong on this specific trade. It's okay to be wrong. I'm wrong sometimes too. So if I'm wrong on this trade and the market reacts by pushing down, what am I going to do? I'm going to prepare for that situation. How am I going to prepare? I'm going to look at the next level that has been support and resistance multiple times. 1, 2, 3, 4 tests of support and resistance in this area. So this will be an area that if the pound dollar breaks down, I'll be looking at for possible long trades. Now, if we head higher on the pound dollar like I expect, I want to be prepared for that too. So how am I going to prepare for that situation? Well, by placing a horizontal line. If we do get this breakup and price action is right here, if I look left, the very next place I can look at for resistance is right here. With that being the case, I want to look there and say, is this a level of resistance that's been tested multiple times? Yes, it is. With that being the case, I know that's going to be my next counter trend level. So in terms of short trading opportunities, this is going to be the zone I look at for the pound dollar if we get there here towards the end of 2019. In this area is where I'll look for counter trend drops out of the pound dollar, depending on what price action does. And finally, last but not least, we have the dollar Swiss, which right now is in a total period of consolidation, and I'll be completely sitting on my hands until this market either breaks above these highs. In that case, this will become support for me, or breaks below these lows. In that case, this will become resistance. Those two are the only two scenarios where I'm trading the dollar Swiss on higher time frames, is waiting for either a breakout above these highs or a breakout below these lows. And in those two cases that I just discussed, if we get this lower low breakout, I'll be looking at that area for resistance. If we get this higher high breakout, I'll be looking at that area for possible support. So that is my analysis on the top 5 major pairs. That's the cheat code I use in order to make really accurate market predictions each and every week on currency pairs. If you want to learn more about it, as we discussed earlier in the video, I have a full training course on this, along with you get to receive my actual favorite zones for trading in every single week in the Pro Trader Report. Link for that is in the description. I'd also like to congratulate our most recent success story out of the EAP Training Program, our flagship program that's a little more in depth than the Pro Trader Report. His name is Rahman, and I will go ahead and post his comment on the screen so you can read along with me. He says, I have purchased Steven's course 3 months ago, and I can say that it is 100% worth buying. The strategies that you learn in the course are insightful and explained simply. I must say, I have been profitable using the strategies taught in the course and can confidently say that you will be profitable too. Thank you so much, Rahman. You can go ahead and read the rest of this testimonial if you'd like to, but I just wanted to congratulate him for being the most recent graduate of the EAP training program and trader turned profitable by that program. Super excited about that. If you'd like to get more information about the EAP training program, then we currently have a few spots available, but they will run out fast. So if you'd like to learn more and get involved, then click the link in the description labeled EAP Training Program or go to eaptrainingprogram.com. With that said, if you are new here, make sure you're subscribed for more content like this. Make sure you click that like button, follow us on Instagram, link is in the description, or at the trading channel. I've now been talking for almost 30 minutes straight, so I'm going to get off here. I wish you guys the best of luck in all your future trades. Hope you have a great rest of your trading week, and I will talk to you very soon. See you later.